Morris, thank you so much for joining me on this episode of the Great Red Capital Gain Shark. I understand you're a little bit of a specialist when it comes to certain types of specialty transactions, namely the Installment Sale Trust, and that you're affiliated with CV Administrative Services. I was wondering if you could tell our readers a little bit about your background and what attracted you to this avenue of business.
Certainly, I'll try to make it somewhat brief. I started my life as an accountant and started working for a CPA firm. Got my CPA and worked as a CPA for a few years. I then went into private industry and worked my way up the ladder, working for NASDAQ listed companies predominantly. I ended up being the CFO of one NASDAQ listed company and treasurer of another. I've also been CFO of companies that have been sold to the likes of Johnson & Johnson, Safeway, and we made one company sale to a British conglomerate. So I know my way around finance.
Yep.
Toward the end of my career, of my W-2 career, I started working with privately held companies. And one of the things that I realized for a privately held company is that at some point in time, they were going to have the last transaction. And that last transaction was the sale of the business. And what I got introduced to was the concept of an installment sale trust. The first conversation I had with a guy about an installment sale trust came about when he was selling a piece of real estate. It was actually a vineyard in Napa. Mm-hmm. And that vineyard was going to net him about $5 million in capital gains. After the conversation, he said to me, so let me get this straight. If I were to sell, pay the taxes, and then invest that money and be able to earn 6% interest, I could earn a couple $100,000 a year. And I said, yes, that's right. He said, if I did an installment sale, you're telling me that I could earn $300,000 a year? I said, yes. He says, I'm interested.
Wow, that's a huge differential. Okay.
So that got me interested in what an installment sale can make, the difference that it can make for someone. 50% more income for the rest of your life, all on Uncle Sam and Governor Newsom's back.
Nice. That's amazing. And this is just a simple installment. And unlike normal installment sales, this is through a trust structure. So what does that actually provide as a benefit for the folks, in your opinion?
Well, there are two things to consider here. If you were to do an installment sale with the buyer, you could do that and you could get this sort of return. However, number one, you don't know how long that installment sale is going to last. I mean, he could pay it off in 1, 2, or 3 years. And believe me, and I can explain a little bit later, that the goose that lays the golden egg is in keeping that tax from ever having to be paid. When you get paid off by the buyer, you lose that advantage and you lose that leverage that you get on the taxes. So the quicker the loan is paid off by the buyer, the less money you're earning on the taxes, and you lose that leverage. Number two, your buyer may not be able to pay you off. So you may have to go back and repossess your property, and your property may not be in the shape it was when you turned it over to him. Mm-hmm. So you have the credit risk, you have the risk of losing the property, and you have the loss of earning money on the deferred taxes because the buyer can pay off at any point in time. With an installment sale trust, what we do is we give you the ability to declare on your income tax an installment sale to the trust, and that can be total and complete for up to 10 years. By total and complete, I mean We won't pay you any of the principal, and that means you get the maximum benefit of the deferred income. That deferred income, that deferred income means deferred tax. That means you can earn money on that tax for the full 10 years and longer if you wish.
Oh, interesting. Interesting. So this is a way to really dial in the control of an after-tax income stream as fully as possible.
Right. You basically, by the contract that you have with the Installment Sale Trust, you can control how much capital gains you get coming out of the trust every year. It could be zero, which means you're going to maximize the ability to earn money on the tax, or you could be controlled, which means over time you will lose the advantage of earning money on the capital gains tax.
Interesting. So how does this, I know installment sales are one of the most popular techniques, and I've been told the other popular techniques include a 1031 exchange and
Correct.
possibly charitable gifting for folks that just want to sell to charity, essentially.
Mhm.
So how does this technique really measure up to the other big contenders out there?
Well, 1031s are great instruments for people who own real estate. And that is a portion of the market that we do work with, but that's not the whole market. We also work with businesses. You see, an installment sale trust can work for a sole proprietor, a partnership, an LLC, an LLP, an S corp, and some elements of a C corp.
Mhm.
And so if you have something of that nature, you don't have a 1031 available structure available for you to defer your taxes. We
Oh,
can
that's
defer the taxes for you. When it
okay.
comes to real estate, yes, you do have the 1031 exchange. And in the 1031 exchange, you can do a tax-free exchange with another piece of property. The issue there is that there are certain hoops that you have to jump through for the IRS in order to qualify for a 1031. You have to identify 3 properties within 45 days, and you have to complete the purchase of another piece of property within 180 days. If that doesn't happen, you have to pay the tax on your gain. And that doesn't happen, from what I've been told, about 10% of the time.
Okay.
Now, if you're willing to roll the dice, that's something and have your 1031 possibly fail and therefore have to pay tax. That's something that that's a risk you'll have to take. Contract with your QI, your qualified intermediary, and with an installment sale trust professional so that we become one of the alternatives for your 1031 exchange. In that way, we can protect you should one of those target properties not materialize and you not be able to complete on that sale.
Oh, that's fantastic. So you could actually have the intent to go into real estate with a 1031 exchange. And if you can't close on the transaction in 6 months, which I imagine happens actually more frequently than people would think, you can still have a rescue type situation.
Absolutely. Absolutely. Yeah,
Oh, that's wonderful. So this really is kind of like it covers a couple of different types of capital gains treatment recipes, if you will.
exactly. Yeah. Now, 1031s are not for everyone. Maybe you've done a lot of 1031s and you have a lot of gains sitting in your property and you're tired of being a landlord. You're tired of toilets, tenants, and trash, as they say. And in that case, an installment sale trust is a perfect way for you to liquidate your real estate holding, not pay tax, and to take advantage of the installment sale um, code section to defer the tax on your gain and earn additional income for yourself.
Okay, fantastic. So let me ask you a little bit about CB Administrative Services. I know you guys work with this installment sale trust. How have you set up your particular practice as in relation to all the other companies that do something similar? Is there anything special about your version?
Well, there are about three or four flavors of installment sale trusts. One of them that I always advise against is something called an monetized installment sale. As of recent, the IRS has been very active in prosecuting anyone who has a monetized installment sale. That's something to keep away from. If you're interested, we can provide information about that, how the IRS is now going after those cases. Unfortunately, monetized installment sales get put under the umbrella of installment sale trusts, along with the rest of us who are practicing otherwise. So we sometimes get a bad rap as a result of that, and that's unfortunate. We are not at all like the monetized installment sale folks.
I believe those are called M453s, and I'll post a little thing up on the side so that people can see the difference with a monetized installment sale versus a structured installment sale versus a regular installment sale. So CB Administrative Services definitely does not cross that line, because if I remember the tax code correctly, monetized installment sales can only work for farmland and in certain types of timberland, things that are used for agriculture. But even then, it's a sticky scenario. So your company just steers away from them entirely.
Exactly.
And if I remember correctly, a monetized installment sale is where you defer all of the tax in a trust structure, but then borrow all the money back. So that essentially you're pulling everything out and you're getting full and free use of the money despite having a tax benefit.
All the money that you would get out, yes. I mean, you get 93%. The rest of it is the fee for the structure. So you're getting all the money out that you could never get out of the transaction.
Right. So that does sound a little too good to be true. So it definitely has some hoops behind it. And that's again something that CB does not do and recommends against. So that's good to know.
Mm-hmm.
What else can you tell me about those other flavors that you have?
Yeah, I mean, there are an installment sale trust in its various flavors have been done over 30,000 times over the last 30 years. So it's somewhat commonly practiced. What we have available to us is the ability to create a trust for a flat $5,000.
Okay.
One of the other major players out there charges 1.5% of the first million and 1.25% for every million thereafter. So in a $2 million transaction, it's going to cost you $27,500 for the trust document. With CB, it costs you a flat $5,000. So that's an area, number one, to be aware of. Number two, the fee structures are, well, I would say our fee structures other than that are about the same as the other competition. We are very careful about following 453. That's something that our counsel has constantly reminds us of, and we constantly check with them to see that we are following the guidelines of 453.
Great. Okay. So with regards to those particular types of installment sales and the way that CB does it, would you say that the discounted price that you charge for the trust document, that would not reflect a discount of the quality of the offering? In other words, are the other competitors out there more complex? Do they have handcuffs? Is your solution more simple? If you could explain that price disparity, I think the readers would like to, or the listeners would like to understand it a little bit better.
Sure. What the other firm does is they charge the additional amount and then claim that that is money that is set aside for tax defense should the IRS come to audit them. Number one, the IRS audits less than 4% of all returns. And number two, this is something that is fairly straightforward. This is a transaction between two willing parties, disconnected parties, unrelated parties. It is an arm's length transaction, and the IRS, in every instance, has they have been notified of the structure of the deal, have not taken it any further other than an examination. So it has never been challenged. As a result, the cost of defense is relatively minimal. If we have a customer who wants to pay, let's say in a $2 million deal, an additional $22,500, we'd be happy to take that money and put it into a defense fund for them. That's something that is available, but we think that when explained, as I'm explaining now, the rationale for paying an extra $22,500, they've pretty readily realized that that's money that's really not needed.
That sums it up perfectly. So it's possible that they're taking some profits in different areas that maybe are arguably necessary. So that's good to know. What kind of deal terms could a seller of a business or property expect from CB Administrative? Is there anything unique about your deal structure when you're dealing with these installment sales?
Absolutely. So again, we go to great lengths to prove to the Internal Revenue Service, should they come to look at our deals, that our deal is very arm's length and unrelated. And so the deal that CB contracts with our customers has to deal not only with the transaction, the annual transaction that goes about where CB pays the interest on the note to the seller, but also with regard to the security. The seller has total security in all the assets of the trust. Each trust is created there's a unique trust for each seller, so that there's no commingling of funds, and that as I said, the seller has total security. At the end of 10 years, should the seller wish to liquidate their holdings, what ends up happening is that CB shares with the seller on any gains above the principal amount of the loan. And what I mean by that is, if they come in with $1 million, we pay them, let's say 6% per annum on their note, and that $1 million becomes $1.2 million, then CB and the sellers share in that gain of the $200,000. The reason we do that is to demonstrate to the IRS that CB is a business entity unto themselves, and not simply for the benefit of the seller. And this further cements the idea that this is an arm's length transaction and not something that is strictly an accommodation.
Interesting. So if you did an installment sale that wasn't profit sharing, i.e., you tried to retain all the profits individually, I just imagine by the way that you described that you have a harder time proving an arm's length scenario.
Correct.
Okay.
Now, CB takes a very minor share of that money, but by doing that, they have a gain available to them at the end of the transaction. So that demonstrates arm's length business purpose.
Exactly. So you would actually pay somebody 6% per year and then profit sharing at the end of a cycle on top of that.
Correct. Yeah, and depending upon how much gain there is, the profit sharing, actually, our profit, the piece that we take, goes down. So depending upon how much gain there is at the end, that profit sharing will ratchet down.
Interesting. And the other competitors that overcharge for their legal defense fund, they do not do this kind of stuff.
They don't. And I think that they are much more likely to be scrutinized by the IRS as a consequence.
Interesting. That's extremely interesting. Okay. Well, let's see. So we've covered installment sale trust. We've covered 1031s. We've covered a little bit about CB administrative services and your deal structure. Um, is there anything else that you can think of that the listeners should know about how to get in touch with CB administrative services, or under what sort of circumstances that you would really shine as an option for them?
Yeah, there's one other thing I'd like to mention. We are all about the seller and all about the seller getting the maximum utility out of their sale. So in the instance where a seller has equity, now let's say I'll give you an example. Let's say you bought a building for $1 million and you put 800,000. You borrowed 800,000. You put 200,000 of your own money into the financing, and today, 5 years later, 10 years later, the building's worth, let's say, $5 million. So we know that we've got gain between the $1 million that you paid and the $5 million that you're selling for. But because your loan is now, that $800,000 loan is now down to $500,000, you're actually going to receive $4,500,000 out of the deal, because the obligation is only 500,000 and the sale price is 5 million. What we do is we try to get that equity piece, the difference between what you paid for it and what you owe on it now, that $500,000 out for the seller. We try to get that money into their pocket because it is tax-free money. You've already paid taxes on it. It is your equity. We like to put that money into your pocket so that you can walk away with that.
Oh, so put it a different way, CB goes out of its way to really only take care of the capital gains portion of the asset part of a business or real estate sale. So if
Exactly.
there's any basis that can be tapped by the sellers, then that is on the table as tax-free proceeds from the sale.
Correct.
Oh, that's fantastic. That's I'm sure that is very interesting. And again, just to hone in, those other competitors don't tend to put that kind of attention to detail into the transactions, as far as you're aware. I haven't heard of that. That's
I'm not
completely
aware
new
of
to
that.
me.
Yeah.
Okay.
Yeah, that's something. I mean, it is part and parcel of our DNA. I mean, we're trying to make a deal, whether it's the deal that I made with the attorney that we work with, that the trust document is only $5,000, or it is getting the money out. We're working every day for working hard to preserve the income of the seller. Our bank account is another example. We have a bank account that that the seller basically has to approve any transaction of money being taken out of that bank account. They have to approve every transaction of money coming out of that account. The reason why they do that is they have security in the assets of the trust. And so there's a perfectly good reason for them legally to have to approve, but we have them approve so that they are totally secure in the fact that although the money for their trust is being held in a bank account initially, and then over time, that money comes back into that bank account, that none of that money is siphoned off for anything other than for which the money's intended to pay.
Interesting. So if I could paraphrase that correctly, um, any amount of money that goes into the trust, the seller that's employing the trust to defer the capital gains has a say in what that proceeds are used to be spent on. In other words, it's got to come to them in form of the installment note, and anything else is subject to their approval.
Exactly. And I would say they don't have a say, they have an approval. We have to be very clear again that the trust does not belong to the seller. This is yet another distinction that that preserves the seller's ability to declare a 453 installment sale. Arm's length, no ownership, no control, um, but but yet security
Mhm.
in their assets.
Interesting.
So we go to great lengths to secure their assets.
Okay. And we've talked a lot about CB Administrative Services. I understand you also have, well, CB goes directly to retail clients that are trying to sell a business or property.
Mhm,
I
mhm.
understand that you also have another business that is separate, that is designed to go to other professionals that have clients in this scenario. Maybe you could explain a little bit about that.
Yeah, so we like to partner with investment managers. Let's say an investment manager has a client who not only has a stock portfolio with them, but they also own, let's say, some investment property, commercial property, or they have a business. And it's now time for that client to sell that business or that investment property. We talk all the time with investment managers about what we do. We get them to understand what we do, how it complies with the Internal Revenue Code, and that we also indicate to them that what they have available now is a tool to help their client not only make more money, but for them, for the investment advisor, now to have 50% more investable proceeds from the sale in their investment portfolio, which means they earn, the investment manager earns more money as well.
Oh,
So
so this is just a way for a financial planner or an investment advisor to have a different message to their current clients, a different service that they can understand, that they can work with and help their clients out in a completely new and unique way.
that exactly, not only do they provide their client with a better methodology for them to sell so that they can take advantage the of the installment sale where they can earn up to 50% more money from the sale, but the investment manager themselves, by virtue of converting one of those clients, has 50% more money to manage for their customer, and that's a benefit to them. So it's a two for. It's a twofer. You know, not only does it benefit their client, but it benefits them as well.
Great. Well, that definitely sounds unique and very interesting. I understand you are located in the Northern California Bay Area.
I am.
And I'm going to put a splash screen up so that folks know how to contact you for each scenario that you described. And in summary, is there anything else that you can think of that we could cover and or touch upon for these installment trusts and the benefit that they have to sellers?
Yeah, I mean, there's yet one other example that possibly can help. Uh, just this last year, I was approached by a business broker who was selling a business for a guy. Now that business, the seller wanted $12 million for the business. The investment manager, I mean, excuse me, the business broker told him it's probably worth 9.5 or 10. Well, you can just imagine how the seller felt about taking, you know, a haircut on what he thought was to be a $12 million sale.
Mhm.
Using an installment sale, the end result for the seller is better for him, even at taking a 15 or 20% haircut on the sale price, because we keep them from having to pay the tax. So if the goal for the seller ultimately was a cash flow from the sale of their business or a cash flow from the sale of their investment property, by using an installment sale trust, they get more money than they anticipated. And that means that selling a little bit for a little bit less of a sales price doesn't sacrifice for them a cash flow coming out of the sale.
Yeah. And if I remember correctly, at least for SBA financing, there is a requirement for an owner carryback. And I believe that that's a very common provision in any business sale, is to receive part of funds over time.
Mhm.
So this is nothing new again, but if you can't get the price that you think your company is worth, this is a way to maximize the bad news, in other words.
Yeah, yeah, yeah. And as I told one owner of a business who had come to me and said, "Well, gee, if it's not worth $10 million, I'm not going to sell it today." And I said, that is your choice. But then you have to realize that until your business is worth $10 million, you're not going to sell it. Meantime, you have all the business headaches.
Yeah.
If there's a downturn in the economy, what happens to the value of your business? What happens when competition comes in? What happens when technology makes it more difficult for you to, keep your revenue up?
Mhm.
You have all those headaches when what you could do is, using an installment sale trust, get the equivalent or more from your sale by deferring the capital gains tax.
Well, that's fantastic. Well, Morris, I really appreciate your time. Thank you so much for your expertise. And again, I'm going to have a couple of splash screens put up so folks know how to get in touch with you. And I hope to have you back on the podcast at a later date to further discuss some case studies and some interesting techniques that you might further develop.
It'd be my pleasure.
All right. Thank you.
Thank you, Christian.